Hello and how are you doing today? Mehran's here, your trading companion, and today we want to summarize things up. This video alone can be enough for your trading journey if you pay enough attention to it, if you get your minds ready for seeing some magic happen. In this video we want to talk about all the concepts that we talked about in this channel, and we want to take some entries in back testing, or it's better to say forward testing, that you can see the results and you can see how all those concepts that I talked about come together as a trading plan. So we want to use those concepts step by step so you can learn how to use those concepts in your trading plan. But I should add something. You first see all the videos of the channel, then you see this video, and then you go and practice these concepts. After that, with your responsibility, you can go and do some demo trading, and after that, if you were ready with your responsibility, you can go and trade some money. We want to get the things together here and provide you with a trading plan using the concepts that I provided you for free in this channel. So let's get to it. First of all, we should know where our market is heading, and we should know our order flow or money flow. How we can do that? First, let me see if I have 15 minutes time frame, for example, around here. First, we want to see our structure gets broken. We talked about the market structure, and we talked about how we can identify the break of structure with three different methods. Here we have our primary structure from this high to this low. It is not complicated. Don't go and, for example, measure this swing, say that, oh, it's 100 pips, so it's more than 90 pips, it's 4-hour swings. Those kinds of concepts are for selling courses. You should get used to identify and seeing these concepts with your bare eyes. Why? The first important thing is that you should see these concepts with your eyes so you can trade all the markets, not only euro to US dollars. Anyway, so it is our primary structure, and I use open and close of a candle to break the structure. So we have our structure from this point to this point, and it should get broken with a candle body. Let's see what happens. It didn't broke, it didn't broke again, and the high got broken. So we are going to use our Fibonacci tool if the market starts to pull back. It didn't start to pull back, so here is our Fibonacci tool. We have two important POIs here. First is going to be this support and resistance, and second is going to be this order block. What is our support and resistance? You can see that here. And all of them are after 50% retracement using the Fibonacci. So you can note these concepts. First, let me write that here. Do we use major and minor pivots in this plan? No, those are some advanced shits that I just talk about them in my mentorship program, because you get confused with those concepts, and the heart that those concepts are going to give you is more than the profits that you can take from them, because those are some very advanced concepts that need some kind of mentorship and supervisor. Anyway, let's see what happens. So we identify the market structure and broke off it. So the market broke the upside, and we have some POIs here. What we do after that, after the break of structure and the market starts to pull back, we should first add two indicators. First is going to be the simple old RSI. You can write the RSI from here, RSI, and add the simple RSI. We are going to change the settings that you can use too, and we want to add some high correlated asset with, for example, euro to US dollar. So you should add some high correlated asset to your chart as well. That I'm going to teach you how to do that, but you should really do this kind of trading with a highly correlated asset. I mean, the correlation must be higher than 80%. For example, I use DXY or US dollar index, and I like to see that in a new pane. Let me change the settings of RSI. You can double click on these lines and the RSI pane will open. I just want to make this more visible, and for this one you can use lines, but I use hollow candles. So these are our two important tools. What we use this for? We use this for divergences with euro dollar in the lower time frame. So we have our breakoff structure, we have our POIs, and approximately we are near that zone. So we can go to the lower time frame and watch for some entry setups. So we should see other important rules. Second, we mark our POIs after 50% retracement of the protected leg. You can see that here, and the protected leg is from this low that is going to get protected to this high. Why? Because this low broke this high. So this is our protected leg, and we use Fibonacci for our 50% retracement, and we mark all our POIs. That can be a simple support and resistance line, or that can be an order block, or that can be some advanced shades like pivots and volume levels, and for example liquidity levels. Those are some important and powerful concepts to use in trading, but not for now. We want to make it simple and easy for you. So we mark our POIs, and after that, the third rule is that we are looking for high probability setups using smart money concept setups plus divergences. It is a rule to look for high probability setups in these levels. It's not just a smart money concept setups. You can use any kind of setups you like to enter the market. But let's see some smart money setups. First is this setup. It is a breakdown. The market is making higher highs and higher lows, and it comes back, it shifts, and it breaks this low, for example this protected low in lower time frame with high momentum and with a strong movement, and it prints some imbalances here. What is an imbalance? Imbalance is the space between the shadow of the first candle, for example this green candle, and the shadow of the third candle, for example this candle. So this pure body of the second candle is our imbalance. For example, we have another imbalance here. It is the space between this shadow and this shadow, the shadow of the first candle and the third candle in this three candle formation. So those are imbalances, and you can see a lot of imbalances in the charts. We don't want to talk about fair value gaps, we just want to talk about trading setups. So here is the first setup. The second setup is simply when it comes back, it makes some point of liquidity, and it comes back and grab that liquidity here. And we should have some kind of confirmation with divergences. For example, a divergence when the market is going up and the RSI is making some lower highs. It is the RSI and the US index is making higher low. Why? Because the US index have negative correlation with euro to US dollar. So when it is negative, all the movements of DXY is the opposite of the US dollar. So when it is making new high, the US index should make a new low because it moves with Euro USD all the time. But when it is not making a lower low, when the market is going up, it is a divergence. It's like a Sikh market. So these are two trading setups that we are looking for, and both of them we enter on the imbalance. It has higher probability, so I like this setup more. Let's see what we have here. So we marked our POIs, we have our protected leg, and we should go to lower time frames to enter the market. I use 15 minutes and 5 minutes for 4 hour, and now we have to use 15 minutes. The market came down. Do we have some divergences? You can see that the market is making higher low, and this is making higher low. The market is making lower low, and it is making lower low. So we can use breakoff structures and imbalances to enter the market, but because this leg is protected as well, we can't enter the market right here. It didn't allow us to enter the market because the market moved very sharply without any confirmation. So we go to higher time frame and we mark our breakoff structures. You can see that we have the breakoff structure here, and we have some POIs. First is going to be here, and the second is going to be this little imbalance here. So these are our POIs. But another important thing to mention is that it came up and it hit our higher time frame POI, so we can enter the market here as well. I didn't see that. Anyway, you can see how strong this confirmation is. The market is going up, but the divergence is here for us. The RSI is going down. Another important divergence is from these two little highs. You can see that here as well. So we can enter the trade after the breakdown. What is the breakdown? I didn't see this trade first, but you can see the results. The breakdown is here. What I said that the market is going up. It breaks this last minor low and it prints some imbalances here. And you can see that right here. Another important thing is that all those gurus who think they know something about the market, they think this order block as a flipping blocks, but we know that it's a point of liquidity. So it's a combination of the first pattern and the second pattern in the same time. So you can enter here, you have your divergence, it touches our POI, and you can see the results. Where do we put our stop loss? You can put your stop loss above the candle that made the imbalance or above the order block, but I'm happy with this one. So now we should go to 4-hour time frame. We are done here, so we clean that up. Yes, I have some manipulation boxes here, so I'm happy to take selling trades there as well. If you don't know what is a manipulation box, and if you want to see these concepts in details, you can watch all the videos of the channel. Anyway, let's continue. So above this point, it is a strong movement. It is not a grab of liquidity. Let me get a little back. I just did that with hurry. So we have a POI, higher time frame POI here. You can see that in daily time frame it is the fractal point of view of the market that I'm good at. So we have another POI here. We have some POIs here. Do I take entries on these POIs? It depends on how strong our entry should be. Do I take trades on this POI if I have some divergences? You can see how accurate these are. We don't have a divergence on this one. This is going lower and the market is going lower, but it is going lower, so this should go higher because it moves in the opposite direction of US dollar. So we can enter the trade here. It may be a stop loss or profit trades. I don't care. Stop loss is there, and you can see the results or the stop loss. Let's wait. You can see the results of this trade. So after that, it didn't provide us with an entry point here. So it is the power of having a fractal view toward the market and having a written accurate trading plan. So we don't enter the market here blindly because we don't have any entry set up there. Anyway, let's see what happens here. Do we have any kind of... No, we don't have any kind of divergences there. Yes, we have a good divergence here, but we don't have any divergence there. I don't enter this trade. It is in a very strong bear market. And let's see the 4 hour. No, I don't trade this POI. I don't like this POI. I'm not happy with this POI, but I'm happy. Let me take this for example here. I am happy with taking selling trades after a good... I'm happy to take selling trades after the grab of liquidity of this order block or touch of this order block. Why? Because in very fast movements like this one with a high portion of this movement as imbalance, I am willing to take trades. I like to take trades on 38% of retracement. It is another rule. You can do that or not do that because 38% is not a high probability level, but you can use that as well when the market moves very fast. Let's see what happens. It touches our POI there. Let's see, do we have some kind of... We don't have any kind of divergence there. Do we have some kind of divergence here? No, we don't have. It came up again. It grabbed that liquidity. I'm happy to take selling trades here. Why? Because it grabbed this liquidity, it hit our POI, and it is like a buying climax. So I don't have any divergences, but I'm ready to take trades here. Why I'm ready to take trades here? Let's see what happened. It is going to the upside. It came down. It printed some good liquidity points. It come up, grab that liquidity point, and it crashes. It is the complex version of this setup I talked about. So I'm more than happy to take this trade. I have a good POI. I have a strong movement to the downside, and I am ready to take trades here. So I'm going to enter the trade here. I'm going to put my stop loss above the candle that made that imbalance, and you can see the results are ready. So you can see how powerful these concepts are, and you can use these concepts day to day without any worry, but with your responsibility. After you get mastered in these concepts and you practiced a lot. So what we exactly do, let's talk about that again. First we go to higher time frame. For example, it is 4 hour for me. Let me clean all those drawings for you. We are going to higher time frames, for example 4 hour time frame. And when we have a movement like this that broke this structure, we are going to use our Fibonacci level. For example, I'm going to use that Fibonacci level here. If it is a stop loss, excuse me, we have a stop loss sometimes. And I'm going to mark my POI. Why I'm ready to take trades in this movement? Because it broke important structures like here and here and that structure here. So it broke these structures, and it is important for us to see the order flow of the market in our direction. After that, we mark our POIs. For example, here is our POI and here is our POI and here is our another POI. I'm not afraid to mark as many as POIs that I see on charts, because first I have a high reward to risk ratio, and the second thing is that we have great rules and strict rules how to see the markets and how to enter the markets. For example, we look for divergences and we look for shifts and smart money concept setups to enter the market. Those two setups I talked about. So it went up, it touches our 50% order block. Anyway, let me clean that up, and we are ready to take trades here. Another important thing is that if it comes up and grab this liquidity, I'm more than happy to enter the market. It's some advanced shit as well, because we can use this imbalance as our POI, and because we have a point of important liquidity before that imbalance. These are kinds of things that you can learn in our private mentorship. You can just go and trade all the imbalances. You can just go and trade all the divergences. You should have deep knowledge about the smart money concepts, the liquidity concepts, a great and a strong basic of technical analysis that I am going to provide you. And more importantly, we can increase our probability and increase our results significantly using volumes, especially VSA, that I don't talk about that concept in this channel right now, because you may confuse things up with each other. So I keep that for my private mentorship for now, and I'm going to talk about some of those concepts with you in this channel in the near future. But now we should keep our work on smart money concepts and liquidity concepts, because the VSA comes handy when you learn a good price action method, and this is the best price action method that I'm talking about. Anyway, so these are our POIs. For this one, I go to 5 minutes if it provides me with. Why for this one I went to 5 minutes for this touch? Let me show you why I went to 5 minutes. No, it is not that touch. I went to 5 minutes because this leg is small and it is not a 4 hour leg. Oh, wait. It is not a 4 hour leg. It is a 1 hour leg. You can see that here. These are some fractal things that you can learn in this channel. I made a video about time frames and how we can identify the POI of our time frames. Anyway, do we have divergences here? Where did you go? Why I don't have? It doesn't provide me with the data, so I'm going to delete that. Anyway, do we have divergences? We don't have divergence. I'm ready to enter the trade above this point. Let me see. Do it provide? Yes, it provided me. Holy shit, these concepts are strong. It provided me with the setup. I'm in love with that setup. You can see the results already. What is that setup? It is when it comes up, it gives you a point of liquidity, it come grab that liquidity and it goes to the downside. Why I traded without an imbalance? Because I talked about it on some videos in the channel. I said that lying shadows have imbalance and order blocks inherently in that lying shadow, and this is a lying shadow in, for example, 10-minute time frame. It is the fractal view of the market that I'm good at. Anyway, so it is the imbalance in the middle of this lying shadow. It doesn't provide me, you can see that imbalance here in the 3 minutes. You should have the eyes of a hawk in the markets to understand these kinds of concepts, that you can learn that with me. Anyway, it makes me so happy when I see that these concepts are this strong in the markets, because they are footprints of the big money and footprints of the liquidation of poor retail traders. So we use those liquidations and we use those footprints to enter the market in the right time and right place. So what we did from the first step, we go to higher time frame and we see our structures get broken. This structure gets, it's better to have a strong movement. You can see that here, and we mark our order blocks. This order block was a little hard to see in 1 hour, so we can go to lower time frames and we refine our order block. Here is our order block, and it touches this order block for 4 hours as well, so it touches our order block. We go to lower time frames. I use 5 minutes for 4 hour and 1 hour time frame, so we go to 5-minute time frame and we look for divergences and other kinds of entry setups. And another important and beautiful thing is that, what is it here? It is a hidden divergence, hidden continuation divergence. You can use that as well. So we have a divergence here and we have a small divergence here as well. Holy shit, these concepts are accurate. So we can enter the market after this breakdown and shift and change of character and on these points of liquidity. If you want to learn this concept in a mentorship plan one-on-one with me for 6 months straight, you can DM me on the Telegram account that I wrote in the description. You don't need that to make profits from the market. You can make profits from the market with those free concepts that I provided you in this channel, and I'm continuing to provide you with more free concepts. But for example, we can reduce the time frame that you spend your time, and we can reduce the screen time that you should spend and practice in the markets. For example, if that 3 years or 4 years to, for example, 1 year or even less, because that's a concentrated very powerful mentorship that you are going to learn a lot of concepts in that mentorship in a short period of the time, so you can save your time for just practicing. Thank you for your watching. Your support, your subscription to my mentorship, your likes, comments and shares and views of these videos is much appreciated for me in these dark times. We have a low internet connection in Iran. They're reducing its speed every day, and we are in an internet blackout. I even use my trading view with a VPN, and always it's disconnecting. So your support is much appreciated in these times that I can't use internet connection to trade consistently. And if I can use those connections to trade consistently, the sanctions is a very serious problem here. Yes, I know how to trade. I have a very green very profitable portfolio in the stock markets of Iran, but I can't trade these assets very easily, but I can share my knowledge with you, and they are genuine and original, and you can't find a package like that in any other course. Thank you for your watching, and goodbye.